we've been down this road before with Zuckerberg and Facebook, and it's just until we actually see some real change being forced upon the company in some of their practices, I think just investors continue to shrug it off. Whether it's you go back to the Cambridge Analytica scandal, where the stock kind of, was under pressure for several months, and then it snapped right back up clearly. It's just a name that continues to work, and advertisers aren't going anywhere else. So until you see a shift in ad dollars, there's really no reason to get off the Facebook train quite yet. And I think regulators have kind of proven a little bit inept or incompetent, or actually cracking down on big tech and some of their practices. At least we've seen that over the last 3 to 4 years. That we've heard a lot more.
But you can't.
Yeah.
Right, Joe. Before we go to Apple, I mean, we heard about a month ago we were talking about these boycotts and delete Yep. Facebook was trending. Facebook stock is, I think, higher now than it was 2 months ago. And suddenly the world has gone silent. You cannot be off Facebook. Facebook, like Google in many ways, is the internet.
Yeah, and don't forget, people are still kind of it's in semi-lockdown mode. Obviously, I think many people are increasing their bubbles to some degree, but they're more kind of there's the increasing addiction to your device, and I think that's where advertisers are seeing it. That's where the data shows that people are still at home and continue to value the service. Thankfully, I'm not one of those people, and I doubt that you are. But yeah, I mean, users are not flocking to any other platform. Maybe the younger generation to TikTok to some degree, but the bulk of users are sticking with it until that you see a shift. It's probably a green light to continue to own the stock.
Yeah, and the Kardashian one-day boycott not impacting it either. Another major development, Joel, in the tech world, of course, is Apple. Virtually, they did a very good job, by the way, as they are wont to do, unveiling a new suite of wearables, tablets, and service bundles aimed at, fitness and entertainment, whatever. A new watch, by the way, that you don't need to have the iPhone to use. I think that might have been the biggest headline. But again, and whatever they did a great job virtually. It's still not the same. We all got to get back in person at some point, but market doesn't care. Is it really all about the phone still?
To some degree, yes. And we're probably going to have that announcement coming in October. No one I really spoke to, at least in the past 3 to 4 weeks, was expecting any sort of iPhone announcement. So not a big deal there. And I think you hit the nail on the head. I mean, even with some of the new features they're offering, the family setup, it's giving parents more control over some of their kids' devices as well. They are just kind of focused on upselling to existing customers. And some of these features are just going to help kind of continue to drive ASP margin support moving forward. Now, wearables, it continues to be a bigger slice of the pie. Clearly the bulk of profits and revenue is still coming from the iPhone portion of the business. But it's becoming a great business. And clearly with the Fitness Plus, apps that they're rolling out as well in a kind of a competitive force to Peloton. We'll see kind of the power that Apple has, but we know that their installed base is massive, and they are marketing geniuses, and they continue to kind of pull people into that ecosystem. And once you're there, it's nearly impossible to leave it. And I think that's what's genius about providing the watches, where you can use them without having the phone. You suck them in with the lower price purchase, and hopefully it leads to kind of selling on hardware and services moving forward.